trade barriers and economic uncertainty has seen the World Bank follow the OECD in slashing its global growth forecast, this time by as much as 0.4% over the coming years. It's also worried that the gap between poorer and richer countries will remain, with the ability to boost jobs and reduce extreme poverty remaining insufficient. But the deteriorating economic outlook isn't being reflected in global share markets. Here, the ASX 200 hit another record high today and is now 17% higher from the low point reached in April.
We've had a huge rally from the banking sector. That's trading at huge premiums to its 10-year average. And we're also seeing tech perform really well. Last month, the tech sector was up about sort of 20%. And I think although recession risks have risen, we are sort of seeing central banks around the world, outside of the US, continue to lower rates. And I think that will offset any damage from sort of trade and a consumption perspective.
US inflation figures will be out later tonight and may give some early indication of any price pressures being applied following Donald Trump's tariff policies. While the Australian share market did hit a new record close, it only just did so because the ASX 200 added less than 0.1%. Property stocks did best while tech fell. Monash IV clawed back some of yesterday's 28% plunge following its admission of another embryo mix-up. Buy now, pay later provider Zip was the 200's best performer following an earnings upgrade. It comes despite new laws which came into effect yesterday requiring all buy now, pay later services to hold a credit licence. It means new consumers will need to answer more questions about their finances and undergo a credit check before gaining access. In currencies, the Australian dollar is stronger against the greenback at almost 65.2 US cents. It's also firmer across the other major global currencies. Oil is a little weaker, with Brent crude falling back below $67 a barrel, while gold is higher at $3,337 an ounce. Qantas will close its Singapore-based budget airline Jetstar Asia from the end of July, following a period of financial turbulence, which will see the subsidiary post a $35 million underlying loss this financial year. It means 16 intra-Asia routes will be shut down, but unlock $500 million in capital, which will support its fleet renewal program. 13 Jetstar Asia planes will be redirected to service routes across Australia and New Zealand.
That's really should be a net positive for customers. More capacity coming into the market does mean that generally that drives down fares, and it means that we'll see more low-cost destinations will probably open up. We'll see additional capacity on some of those routes coming in. It also means that the fleet will be a little bit older, as the Jetstar Asia aircraft are a bit older, but then they're not as expensive to run as potentially some of the newer jets.
Around 500 employees are expected to be impacted by the decision. Qantas, meanwhile, has also flagged a $30 million hit to its earnings from ex-tropical cyclone Alfred. A new report by the United Nations Population Fund has exposed an unprecedented decline in global fertility rates at just 2.2 births per woman, less across developed countries. Authors blaming the decrease on economic constraints, among other key barriers.
The decision to grow your family is becoming less of a choice and more of a trade-off. A new report by the United Nations Population Fund is shedding a light on the barriers impacting global fertility rates. Economic issues primary among them.
Part of the blame lies on absolutely unaffordable housing, super high costs of living. These are very common reasons to have fewer kids.
The result, plummeting birth rates.
There is no fertility crisis. There's a crisis of choice. There's a crisis of options, and that we, as a society, as governments, private sector, need to make sure that we are creating those enabling environments.
The UN says global fertility rates have more than halved in the past 70 years to 2.2 children per woman, just above the threshold needed to maintain population stability. That number is lower still in Australia and the US at just 1.6, dropping again in China. India was higher at 1.9 births per woman, but still below the global average despite its large population size. The survey also found among its 14,000 participants an inverse relationship between economic development, education and fertility rates.
The higher the education and GDP rates of a nation,
the lower the birth rate. 1 in 5 respondents don't believe they'll be able to have the number of children they desire, with 39% blaming financial limitations. Among the other key barriers, climate anxiety and fears about the future, and the inability to find a suitable partner.
Women particularly are seeking their careers early in life these days. That's another change that we've seen since like the 1950s, 1960s. And unfortunately, people's fertility falls off a bit after about age 35.
Experts say temporary measures like baby bonuses don't work in the long term. The alternative?
Improve the accessibility, quality, and sort of confidence that parents have basically in the childcare system.
In Australia, immigration remains the main contributor to population growth. Last year, net migration was around 380,000. That's projected to reduce to 255,000 over the coming year. Genevieve Lamond, SBS World News.